channel. Now, I want to let you understand how to use the same strategy for spikes. So I mean the strategy for hit and reversal strategy. So the only thing we just need to change here is on the stochastic, which is these levels. So we need to change the level to 0 and 100. 0 and 100. So that's the only thing we need to change there. So any other things still remain the same. So how do we use it for trading spike? Now the first thing we need to check before we trade our spike using under crash 1000. So we must ensure that we have our price below linear weighted moving average, and also our MACD bars should come below under 0. So once we have two criteria met, so we need to wait for this. Now we are still going to use the same method of hit and reversal, but in this case now we want to apply that method of hit and reversal on 100 levels. So after the first and second condition met, the first condition is price below linear weight moving average and also MACD below 0. Once we have that two conditions ready, we now wait for our hit and reversal pattern. So one of them is this. Let me pull out the arrow. Now, as you can see here now, the stochastic line here hits 100 levels, but we need to determine if the reversal happens within the two range of candles before we can decide that our trade is valid. Now let's place vertical line on it. 1, 2, 3, 4. Can you see now? So before the trade reverse back from when it touches 100 and reverse back down, it took almost like 3 to 4 candles. So the criteria is minimum of 2 candles, but exception to the rule is this: you can decide to use minimum of 4 candles, but for the accuracy of the signals, stick with only 2 candles reversal. So if you stick with only 2 candles reversals, the probability of getting high winning trades is on your side. Not that if you use 4 candles reversal, you are not going to win, but you might have some kind of losses sometimes. Just like this one now, if you look at it, this is where the stochastic hits 100 level, and if you count the arrow from where it hits the 100 level, we'll be talking about 4 candles. 1, 2, 3, 4. Can you see it now? So immediately after that 4 candles, you can pull your trigger. You can execute your sell trade with 10 candles. You can execute your sell trade with 10 candles. If we check here, let's assume that we're using 4 candles parameters as our minimum yardstick. So if you check, you will get, if you check 10 candles here, so you will see that you will catch this spike. Can you see it now? So one thing I want you to do immediately after, you have 2 options. Is either you just stick to that 10 candles and whatever thing you get from it, you exit the market, or immediately after the 10 candles, immediately after the 10 candles, pick another 5 candles to in case if the spike is going to continue in that particular direction. But if you don't want to do that, immediately after your 10 candles, exit the market immediately. So on the assumption that we're using minimum of 4 candles, that is where we're able to spot this signal. But if we stick with only 2 candles criteria, this signal is not valid. Now let's check another one. This is another one. So this is another one. Let's check the candle criteria here. The stochastic line 800 at this level, yeah, this meets our criteria. 1, 2. Can you see now? 1, 2. The first candle, 800, and the second candle reversed back down. So immediately after that, we open our trade with 10 candles. Can you see now? This is 10 candles. At times, some people like to ask these questions that where are we going to fix our stop loss? That 10 candles I'm talking about takes care of your stop loss and take profit. That is why you just have to be disciplined. When you are trading FX, they will tell you that you should have a trading plan. So also, if you are trading, be it binary option or any other things, you're supposed to have a trading plan, and you must stick to that trading plans for you to achieve your financial goals. Now, one of the trading plans I strongly believe you have to put in place. One of the trading plan I strongly believe you have to put in place is, okay, before you start trading for the day, ensure you have the number of candles you want to pick. If part of your trading plan is, okay, whatever happens, once I spot a valid signals, I'm picking 10 candles. Don't extend it. Discipline yourself, restrict yourself to that 10 candles. If your trading plan is, okay, immediately after the 10 candles, if there is any spike, I will wait again for another 5 candles before I exit the market. Stick to that. So that is one of the things that we need to learn as part of our trading plan to achieve our financial goal. Now let's check if we are going to get another signals. Now the price has moved above linear moving average, and also at the same time the MACD bar has also moved above zero line. So this is our resting period. So we are not going to do anything here. We should just keep watching till the price reverse back to the basis, which is below what is it called, below linear weighted moving average 144. As you can see now, when we scan all this market for today, we can only see 2 signals. One of the signals is for 4 criteria candles, and the second one is for our valid signals, which is 2 candles criteria. Now let's check the other side, which is boom 1000. Boom 1000. Now this is boom 1000. So for boom 1000 here, our focus is on the price above linear moving average 144 and MACD above zero levels. So that is our main focus. Anything outside that 2 criteria, we just close our eyes and wait for when we get the valid criteria. Now let's check from the start of today's market section to see if we can spot any valid signals. Now let's keep moving. Here is our resting time. Whenever you have your price below linear weighted moving average. So here the candle is more than 5 candles, so it's not valid. Though the first condition on the main chart is met, which is price above linear weighted moving average 144, and our bar, MACD bar, they are above zero level. Those two conditions are perfectly met and okay. So the last condition is not met because of what? Because of the candle criteria. Now, if you look at when the what is it called? When the market touch, when the stochastic line touch 100 levels, so the candle is at the sixth candle before the spike. One, two, three, four, five, six. Can you see it now? So unless you just want to risk it, so if you don't want to risk, ensure you restrict yourself to that candle criteria. So just make sure that, okay, our normal criteria for entering value signals is just 2 candles. But if you just want to bend on the rules, that is exception to that rules, immediately after 4 candles reversal, you can place your trade. So I hope you guys are getting it right. So just like this one now, for today there is no valid signal to trade. Let's check on the 6th. Probably we might get a valid signal so that you can clearly understand what I'm talking about. So here now, this is where the market starts. This is the where the market starts. This is the starting section of the market. So let's check. Here, can you see the MACD is below and the price is below 144, so it's invalid. Let's move on. Yes, I think this is where we have a valid signal. Look at this place. Here now is more than 4. This one is not valid. And look at this place. We have the first candle touches 100 at this level, and the second candle reverse back up before the spike. So this second candle now is our entry level point. So the same thing happens here. Let's check. 1, 2, 3, 4. So that one is where you can bend the rules there, provided you want to trade it. But if you don't want to trade it, you can leave it for uh you can wait for another valid signals. Let's move on. So can you see now that the to get the valid condition is very scarce? That is why you just have to combine the whole set of that's why you just have to combine the whole set of boom and crash. That is boom 500, crash 500, boom 1000, and crash 1000. So because of the scarcity of signals on boom and crash, you can use it to trade any volatilities, be it jump, range, dex index. Just try to ensure you have a very good money management and you discipline yourself. Just look at this one now. This is a valid signal. It touches the first candle touch, and the second candle reverse back up. Can you see now? So this touches and the second candle reverse back up. So you place your trade here. So if you are using it to trade, all the other volatilities, just pick only five candles, but always ensure that it meets all the criteria. Now if you look at this, the conditions now, the price is above linear weighted moving average 144, and on our MACD, bars is above zero levels, and the third condition is touches zero and reverse back up. So you pick your five candles. So should in case if there is any losses, you can martingale 2 or 3 times in order to recover the losses. But what I just want you to understand is the tendency of winning the martingale is very high because of the nature of the position, because of the position of the entries and the position of the market. Because at this point level, this is a short time, I can call it short time, oversold region. It's just short term, because if you check the higher time frame, it's possible that the market is just retracing. It's not that it's possible is in line with the trend. At the same time, it's possible that when this particular action happen on this 1 minute time frame, it's just a retracement at higher time frame. So that is why we are just picking only 4 or 5 candles. So you can just set up almost like 20 pairs, scan through the pairs, and check if there is any valid signals you can pick from there. So just ensure that it meets the 3 conditions before you place your trade. Don't trade outside the context of the condition I specify. Don't trade outside the context, because if you do, it's like you are gambling. So just ensure that you have a perfect entry, and you ensure that all the 3 conditions met before you place your trade. So you can as well use it to trade volatilities on 15-minute time frame. Ensure you have the same market conditions the same market conditions you have on 1 minute time frame. Ensure you strictly follow that same market conditions on 15-minute time frame before you place your trade. And also, I just want to let you understand that this is the second part. This is the second part of the strategy. So the third part of the strategy will be released tomorrow by God's grace. So, and that one will show us how to use the candlestick pattern with the hit and reversal strategy. So we want by tomorrow by God's grace, we want to combine candlestick pattern with that particular strategy, how to use it on higher time frame, so that once you spot all those candlestick pattern and it align with all those filters and conditions, you place your trades, and it's going to give you high probability winning trades. So just watch out tomorrow by God's grace. I'm going to post that one as well. Thank you.